Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. Okay, so deep intake of breath time. So I have said repeatedly in this commentary for months and months that the most significant feature of this market has been the very significant lows of 2021 at 15,665, which led to the lows of late November 23 plus the lows of in 2024, most recently in late October, November and early December, and also supposed congestion in January and February this year. So I'll now reprise my commentary. The same commentary I've given here for many months now, and I quote, "It is at this point that I feel obliged once again to mention the big descending scallop pattern that I had been going on about for months and months and what it may mean within the near-term universe." So the key level had been the lows of 15,840, a significant move below this, and by that I mean you would know it when you see it. A significant break below this could give a downside potential for the descending scallop pattern down to the 13,830 zone. End of quote. For a while I even started thinking that this pattern's time had come and gone and maybe I should retire it completely, but I didn't. And it was there as recently as last week. Well, phew, we definitely had, as I said, a significant move last week, one you would recognize when you saw it, and prices dropped down like a stone down to the 13,830 zone with a low of 13,865 yesterday. This big move lower also retires the at-risk, harder to reach secondary topside target I've spoken about these last few weeks for the small mid-December 24 to late February 25 action being a possible double bottom, even Adam type, though admittedly not a very pretty one. All in all, it is satisfying to see such a move down to a target I've been prattling on about for many months, and to do it in a way that I suspected it might do. As for what's next, well, we have just reached the end of a huge move, and I think it will require some more thought and observation to see what will be next. LME 3 months zinc. Much like LME aluminium, there had been here a number of patterns that have affected the market in recent times, all happening all at the same time. The first is the broken, until this week, the still refusing to die old dark blue May to August 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle tines. This one would not die, but it looks like it might now have expired, though I will keep it on my daily chart for a couple of more weeks just in case. We are right now below the lower tine, currently at 26.19, though we have yet to close below it completely. Then there was the lower tine, currently at 29.23, of the somewhat newer February to August 2024 bullish shift pitchfork. Prices have been pressing below this lower tine for weeks now, but this past week we have accelerated the fall such that I will remove this pattern by next week. Then there is an even more recent pattern, an early January to early March this year reverse head and shoulders pattern. Possibly earlier I thought it might be a reverse head and shoulders bottom, but as I said last week, and I quote, right now looking more like a reverse head and shoulders continuous pattern with prices pushing back below the bright red neckline, currently at 28.78. 2 weeks ago, so that isn't now 3 weeks ago, 2 weeks ago I favoured the reverse head and shoulders bottom idea here, and I laid out a primary target X overhead at 30.92 and a secondary hard to reach target X1 up at 31.68. I am now contemplating possibly retiring these two targets already because, as I said last week, so that's 2 weeks ago, on the earlier move higher, and I quote, "Just keep a wary eye open in case it becomes a false break." End of quote. Both these targets have now been retired. So what have we now? Well, we are just below the dark blue lower tine, but we have not closed below it as yet. However, yesterday's low of 25.56 ties in quite well with the lows in early August last year of 25.49 and 25.59 and 25.63, as well as the important 2021 low at 25.47 that prompted those lows back in August. However, I would like to draw your attention to another feature, the March 2020 to date uptrend below, currently at 24.82, highlighted in purple on my daily chart. I'm not sure how good this will be, as it has been finessed a number of times before, but it is still nevertheless there and ought not to be ignored. LME 3-month tin. An extraordinary and significant move, one that technical analysis worked on very, very well, and I'm even considering saving into as a this works when all others fail type situation when I teach. As in some of the other metals I've discussed, there are a number of patterns here affecting this market. Most of the ones from a few weeks ago have reached their target levels and are no longer relevant, so I'll concentrate on the ones that still are. The first one, and it is a big one, and old one, and a goodie, is the dark blue November 23 to November 24 bullish shift pitchfork. This pattern is large and is also still live, with the market plummeting down, reaching and bouncing up off the lower time yesterday, which is currently at 31,655. I imagine it was also reinforced by the nearby gold long moving average, currently 31,510, and the mauve medium moving average, currently at 31,260. Next is a pattern that I only drew 4 weeks ago, which is no longer valid and will be retired after this commentary, but which is interesting to note, as it was the breakdown below this pattern yesterday that led to the big move lower. It is the early February to early March bullish Andrews pitchfork. I had wanted something to capture the bullish angle of attack of this market, and it did so, and even gave notice of when it was no longer valid. We also had a March-based bullish shift pitchfork, a new, supposedly shallower pattern, which last week I saw had a certain synchronicity with the previous bullish Andrews pitchfork. However, I have already removed it as it's no longer valid and cluttered up the view of the true market actions. Now, the last 4 weeks' actions allowed me to look at the March action as a potential double top pattern or a potential bullish half hesitation. Last week I did favour the bullish half hesitation, but it turned out to be a very lopsided double top pattern, with the market ripping downside targets, both of which had been achieved once, as I said last week, and I quote, "Watch out for the neck of this pattern at around the 50% Fibonacci line of the March-October 2022 move at 34,175. End of quote. So where are we now? Well, the big dark blue bullish shift pitchfork is now the showrunner here, so bear that in mind, as well as the gold long moving average and the mauve medium moving average, both below the market. Closer in we have the green short medium moving average just below the market, currently at 32,935, and the purple neckline extension, the very narrow, yes, it's that one. If you've read my commentaries or seen my commentaries, it's that one I'm talking about. The very narrow April 2024 head and shoulders continuation pattern. Whilst on top we have the bright red neckline extension of the August to November 2024 head and shoulders top. I should point out that these last three, the green short medium moving average, the purple and red necklines, did not actually stop the market on the way down. So I'm wondering how good they will be now as either supports or even resistances.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.